Let's bring in Andrew Sentance, PWC Senior Economic Advisor and former BOE Monetary Policy Committee member. Andrew, thanks for coming on. How would you have voted today and why?
I think I'd been with the minority who are voting for a rise in interest rates, but not because I think this is the best time to raise interest rates. I think we should have started raising them 2 or 3 years ago. And if we gradually raised them over that period, we would be in a much better position now.
We had Naira, our reporter, Naira Chair, Andrew, outside the Bank of England, and she did a wonderful hit saying, I'm struggling to give you a coherent narrative because the BOE cut the growth forecast, cut the wage forecast, but Mark Carney said rates may need to rise more than markets currently imply. What's the narrative, the clear, coherent narrative from today, given those two slightly jarring factors?
Well, I think the explanation, I wouldn't say it's a clear narrative, is that they missed opportunities from 2014 to 2016 when the UK economy was growing pretty well to gradually inch interest rates up. So we would be in a similar position to the US at the moment, or even perhaps slightly higher interest rates. And there's a big challenge after the global financial crisis where we cut interest rates to such dramatically low levels. Central bankers have a responsibility to try and normalise relationships, and I don't think they've really taken on that responsibility here in the UK. In fact, they cut interest rates in 2016, which was probably a mistake.
Andrew, it's always difficult to sort of predict what would have happened had you done something else, but walk us through what you think the economy might look like if the bank had started to raise sooner.
Well, I don't think it would have hit growth. I mean, we can see this in the United States. Growth has not suffered as the Fed has gradually raised interest rates. There was a song in the early 1980s, which was a bit of a hit here in the UK, called "It Ain't What You Do, It's the Way That You Do It." And I think this is an important mantra for monetary policy at the moment. Actually, gradually raising interest rates is the right policy, and delaying it raises the risks that they will have to rise more sharply in the future. The Bank of England have ducked out of this for quite a long time, and they really need to embrace the challenge of actually getting interest rates back to more normal levels.